All right, so we have continued to develop here in this critical range, continuing to fluctuate between this very, very important $63,000 area of resistance and our, quite frankly, uncomfortable zone of support at $60,500. We're now testing the lows once again. So range traders are going to be liking this because, this is basically your very typical sideways trading range. You short the tops, long the bottoms. You'll make money until it breaks, right? So that's pretty nice. And obviously, this has been a predictable range because we've been using it as support going all the way back to the very end of February 2024. So that is like 2.5 months now. The thing is obviously we had some pretty nasty fake outs. So, I can understand why this might be an uncomfortable area to go long, but I think range traders are still going to be enjoying this. And the short over here, definitely interesting because this is a time where we really want to see strength being produced for Bitcoin, right? Like the question is, have we actually formed the bottom? And if we have formed the bottom, are we going to start to rise up from here? And if we form the bottom and if we're going to start rising up, then I think you would be expecting stronger reactions to be coming off some price action like this, right? To me, what this looks like is that the market trended down and it's just been in this kind of recovery phase before continuing to trend down here. There is actually a bull flag though, and I should actually point that out to you before I continue though, just to be fair with my analysis, because if we do take a look at this, you might be excited by this kind of thing, if you're interested in bull flag formations. Let me draw this from this low right here, and the resistance looks something a little bit like this. And so we have got a bull flag here. You can probably adjust this and whatever, it doesn't really matter. The ultimate point is that we are seeing this price action definitely start to condense, where we're respecting the same kind of support, respecting the same kind of resistance, coiling up, getting ready for an explosion. And because this is happening with a bullish move incoming, that does potentially point to upward price action. I don't really care. I'll be honest. I'm just going to swat that away right now. I really don't think it's particularly important. And, the other thing that's important to note, though, is something like the S&P 500. I mean, again, we know that we're not looking for a perfect correlation here, and I don't want to get bogged down in silly arguments like, yeah, obviously Bitcoin's not going to trace the S&P 500 perfectly. That's very, very clear. But what's also clear is that Bitcoin has consistently been performing badly when the S&P 500 has been performing well recently, and that's to the tune of the S&P 500 now flirting with its all-time high, only 0.6% away, whereas for Bitcoin to get to its all-time high, we are looking at a much larger 20% move from here. So it's definitely not looking good from that particular perspective. And so it does bring us back into this range now where, if we're just not able to get above this particular level, then are we looking at the market breaking down here? And like I said, range traders are still going to be liking this because until that range breaks, you're going to keep on going long and you're going to keep on making money, right? So, and especially if you've got the free capital that these exchanges are giving you with the links in the description, you're not going to care about this. It's going to be a walk in the park for you. You're still going to be getting up to 30K on Bybit when you deposit and start trading my link and with my link, and over $100,000 on BingX when you deposit and start trading using my link here without KYC as well, right? So when you've got all this free capital in your trading ranges like that, you're just not going to give a fuck, right? I mean, ultimately, eventually it's going to not work out for you, but in between all of that time, you're going to be picking up your beautiful trades. And again, with this free capital these exchanges give you, you get to withdraw the profits you make. So that is super, super cool. But of course, if it does end up breaking, I think we're going to hit a danger zone pretty quickly. I think that one of the things that's actually really showing us something very important now is the fear and greed index. We've seen a reading of 66 here. This is going to update in about 5.5 hours, so we'll see what happens. But with a reading of 66 here, we're definitely starting to, move upward a little bit here. And for what reason? I think that we're probably a little bit too far off in terms of sentiment right now as well. I think there was a little bit of a liquidity grab up there as well. So there's probably one due for the downside here as well right now. In addition to that, and, with these kind of factors in mind, I mean, for the market to just flush out a little bit, it really makes a lot of sense. I still think that the writing is on the wall. I think it's going to look incredibly obvious in hindsight if we do end up getting that drop. And I still think that the invalidation for that is going to be this red line right here. It's been proven yet again that we haven't been able to get above this particular red line. And if we do zoom in and really take a look at what we're working with here, this was a pretty critical zone of resistance. We get some pretty serious taps of this resistance here. I mean, not even taps, I'm not even quite getting there. But to me, that just strengthens this resistance zone, right? Like, the more you get rejected from it, the more it's clearly important. I do think it's getting weaker, right? Like, if we get there again now, then I'm going to have to start saying that it's getting more likely that we break that resistance because, we've been, first of all, it's a very local area, right? Let's just establish that, right, as a fact. This is a very local area of resistance. What does local mean? It basically just means it's a short-term area of resistance, right? It's something that we've only been using for a small amount of time, and it's something that, isn't that important technically for the market. Lately, it's been important, and that's why it's a local level of resistance. But the thing is that now that we've been getting rejected off this level quite a bit, to me, not only is it going to be easier to break above it if we get back up there, but it's going to be way more significant as well, because the market now knows that this is the place where you stop buying, because the price is probably going to drop because it's resistance. But as soon as you get above that level, then it's like, wait, what happened? We're through, we blasted through the clouds. Now there's, a very thin atmosphere here that, we can go very, very far. And I think that's when you start to see the really big, quick spikes that would probably take us up to $67,000. It's definitely something that I will be paying attention to in this market, because I think it could be a very, very big deal for the market. Especially given all of the recent circumstances, just the market kind of being left, in the dark, just wondering what's going to happen, if the prices are going to be pumping and so on. That can definitely turn things around. And I think that just means we've got very polarized outcomes now, whether we break the bottom or the low. I don't know. It's hard to say, and quite frankly, I don't really care. If I wasn't a YouTuber, I wouldn't even be looking at the charts at all right now. I would just have my alerts set and I would fuck right off, and I'd just go drink some cocktails or hit the gym or both, call that being hedged. And, and just chill. I would just absolutely relax, not caring at all about what the market is doing, because we are in an equilibrium right now, and you can't really trade these equilibriums, right? I mean, if you're a very, very long-term trader and you think that the trend is looking good, then you might be looking for longs down here to trade the upside. But if you are a long-term trader or a mid-term trader, but you recognize that this chart looks pretty weak right now, you might feel like, look, the time to go long off this level was here, or the time to go long off this level was here, or here, or here, but it wasn't anywhere over here, and it's just getting more and more risky. And that's kind of the camp that I'm in, right? Like, this was a valid area of support, and it obviously still is. I've been, probably the number one person saying this to you on YouTube for quite some time now, and I'm very proud to be that person. Support is where bounces happen, and resistance is where rejections happen. And, it doesn't really matter how scared you feel at support or how bullish you feel at resistance, because that's always how it goes. That is what those levels are there for, right? So when you start looking at it from that perspective, you're not going to be too worried. But also when you start to consider that these levels do get weaker the more you test them, and you've been spending, if we look at it from this perspective, we've been spending a lot of time below the kind of mid line, the mid box of this range now, 31 days. I mean, we've been in this range for 76 days, so that's a very decent chunk of time here that we've been spending below the midpoint, without even returning to the top. I think that's also a really big deal. We haven't really broken out into this box of trading zone over here, other than for a couple of fake outs, so that's not anything significant at all. I mean, the last time, again, that we were there was about, 30 days ago. So it's been quite some time since we've been able to do anything particularly bullish. And, those are just things I'm keeping into account, because one thing I'm very, very worried about is that if the S&P 500 does actually end up dropping, traditional finance has had no bearing on crypto lately in terms of, traditional finance is doing well, but Bitcoin's not. If the S&P 500 starts to tumble now, then, you've got a very, very bullish factor for Bitcoin just being swept, just the rug being swept here, and I think it could get very nasty for Bitcoin because of that. I think it could get very hot and uncomfortable for Bitcoin very quickly if the S&P 500 were to start dropping, because, Bitcoin's had a good environment recently and it still hasn't been able to do anything with it. So what's going to happen if the environment sours? It's something that I want to keep in mind, because, even though I'm not really the kind of guy that's like, oh, S&P 500's at resistance because it's at an all-time high, it's, S&P 500 doesn't really care if it's at an all-time high, it just keeps going up. So I'm not really saying that, but if it does end up pulling back anywhere, given what Bitcoin has done so far, I think it could lead to some pretty nasty disasters here in the crypto market right now. So that's something I do still want to stay very, very overtly aware of in this market right now. I do think it is a very, very important thing to be looking at this stage in the market, and then it's standard, right? Like if we do end up getting that breakout above these very, very important price levels, I think now, before I was looking at like the 65K range for resistance, I think now, because we've been spending so much time consolidating, because we've really validated this resistance level in the mid 63s, I think it should be a pretty quick rise up to even $67,000. I think 67K has been the most important level of resistance in this range for quite some time. Lately, it's probably actually become the area that we're struggling at, because these levels do shift the more you trade, the more you kind of produce data, on the chart, that, the more your conclusions are hopefully going to be, changing or being open to change, which is very, very important if you want to be a healthy trader. But 67K still remains one of the most important levels in this range. And I don't really think that these other areas of resistance are going to stop Bitcoin, given that it's going to take so much power to push through these levels now, that it's probably just that power is probably going to carry Bitcoin significantly higher at this stage. So that's something I'm going to continue to watch for in this market. How are you doing, Ghost? Can you guys see Ghost? Ghost, come here, Ghost. No, you can't see him. He's a little bit too low. I'll see if I can throw a picture of him up on screen. Maybe I'll post him on Twitter and show you guys. But yeah, he's a bit too short to make it into the camera. And yeah, same thing on the downside. If we take a look at the downside here, for where support would be, I think that we are looking at, about, hang on. Can you see him? You can see his cute little ears. Ghost, come here. Up here. No, he's too short. Damn it. Yeah, and I can't move my camera. Only for me to see for today. But I think that, again, it's the same thing I've been saying for some time. I think we're still looking at 52K, and below that, I think we're looking at 44K. Honestly, after saying it out loud to you guys a couple of minutes ago, I really do think that for your own mental health's sake, just consider setting alerts if we break any of these levels, because that's when the market is going to be, super tradable again. That's probably when we're going to get some more clarity on which way this thing is going to go. But until that time, I really wouldn't stress myself out about this range. Let other people lose their money and, stress themselves out over the market. We want to keep ourselves, proper and in a good mental state to be able to trade this market. And, in order to do that, we need to safeguard ourselves and make sure that we're not risking our capital at times where it's, not sensible to do so, because that's going to actually grind down on us mentally, and it's going to make it that bit harder to trade when we actually see something good. If you've kind of if you've weathered down your conviction, if you've grinded down your conviction as a trader over the last few weeks, in a shitty trading range, then when something nice comes up, you're going to be in a worse position where you're not really able to take advantage of it, and that's just going to make you feel even worse, and then you're going to revenge trade even more. Trust me, I'm speaking about it the way I am because I have been there, and I have messed it up, and it is very, very painful. So I don't want you guys to be making the same mistake here. Let's take a quick look at altcoins. We've seen, TIA in particular, giving us an interesting representation of the altcoin market. It's gone absolutely horribly for TIA right here, really not producing that bounce that I was hoping for if we get above the resistance level. And if we take a look at this from, mid-end of April to today, it is down by 33%. If we measure it from just the last 9 days, it is down by 23%. Again, just in the last 4 days, down by 15%. So this is a dying market. It is going horribly for TIA right here. And this is definitely one of the more dramatic ones. But if we take a look at Matic, for example, from this high, which we punched in again about 8 days ago to today, we are still looking at a 15% drop, and it is returning back down to the bottom of a range over here. So this could be where interesting trading opportunities start to open up, right here. I don't know if I would take them necessarily because of nasty wicks like this, but it is something that you might be interested in. If you're going to trade them on spot, then you don't really care about wicks like this. And it's worth noting that Bybit does offer 0% spot trading fees, so you can trade these shit coins completely free of charge as much as you like, and that would be all yours. So definitely do consider it. And yeah, if we do zoom out and take a look. This is definitely a valid area of support, and all altcoins are going to be looking broadly similar right now, right? If we take a look at Solana, which is probably one of the more unique ones, it does still have that support where it is right now, and if it drops down, it's got some more support down in the kind of high 120s. Let's take a quick look at Doge. Obviously, meme coins have been a big talking factor in the market lately. We've got beautiful support right here at about 12 cents. And that does stretch up to about 13 cents right now, sitting pretty at about 14.5 cents. I don't think this is a particularly useful level for Doge. It does look like it's an area of support, but it looks like a little bit more of a kind of local area, and obviously we're more interested in the macro areas, right? So that's something I'm going to be paying attention to. I don't know if it's something that's really catching my eye at the moment. Let's go through a couple more just because I'm curious. Cardano looks beautiful. Look at that. It has a little bit lower to go until it gets to its respective area of support, but this looks pretty clean. I'm not going to say that this looks like a buy, because just like Matic and the others, it does have this general downtrend, which is pretty gloomy, right? Like, take a look at Matic. It's not actually that clear on Matic, but yeah, there's an exception here, but there is still a lot of lower highs being punched in here. There might actually, no, there's no real pattern I would draw here, but that's okay. That is fine. There is definitely, some sort of a descending triangle here that you can start to pick out, though. Take a look at this. Yeah, there's something, so not the best, but I think overall we are starting to see some concerning signs here where, yeah, I mean, ARB is showing us the same thing that Cardano is doing a little bit more clearly. So these are things that I'm definitely interested in paying attention to, because this is where opportunities are probably going to start to show up. I don't think that they're here quite yet. I don't think the charts look clean enough quite yet. That's okay. I'm not in a rush to make money. I think what a lot of people miss out on is that if you actually pick your trades more selectively, you'll make a hell of a lot more money. But if you start amping that aggression up again, then the only thing you will do is you will feed into a gambling addiction, because that's what it is if you're trigger happy, and you will lose more money. So you're going to ruin yourself mentally and ruin yourself financially, simply because you are greedy, thinking that the more you do, the more you earn. But that's definitely not the case in these markets. And like I said, I will say it for the third time now, most people, including me, are actually just better suited to setting alerts and then forgetting about it and just getting on with the rest of their daily life, because the markets ain't going anywhere. And if they're not at easy levels, if they're not at clear levels, then you don't have to trade it. You're not forced to trade it. You're not forced to do anything here. I think Bitcoin really needs to resolve this range before it can become interesting to me at this stage. And I still think that it should go down. I think that if it can go down, grab some liquidity here at least and then move up, that would be so healthy for Bitcoin compared to what we've seen so far. And I think that we're due from it from a lot of perspectives here. I really do. I think we've just got to look at traditional finance to see what happens here, right? If it's moving up, well, that's clearly not helping Bitcoin. But if it starts moving down, then I think Bitcoin could be in a bit of trouble. So that's something I'm going to continue to be watching out for in this market as well. We've got the dollar here just kind of bouncing off that 105 level. It's already produced that bounce and now starting to drop down a little bit. So not a great candle here for the dollar. But again, these are things that should have been helping Bitcoin, and Bitcoin's just not. Bitcoin's just not doing it. So it could be price suppression. You could just be screaming manipulation because it looks like it should be rising up and it's not. So maybe you're more of a conspiratorial trader, and you take that approach. And you know what? I wouldn't blame you if you did. But no, I just think it's weakness. I just think the market looks weak, and people are seeing that, and people are deluding themselves, and that's why we've got a fear and greed index, which is still pretty inflated. Quite frankly. So that's something that I've been finding interesting to be watching. Thank you all very much for watching, ladies and gents. I hope you've enjoyed this one. I moved my camera for this video. I realized during this video that I don't actually like it. I want to put it right back over there. And I want you to let me know which side you prefer it on. I think I definitely prefer it there, to be honest, after, seeing myself on video throughout this one. I think it is way better over here, and you're not actually losing much screen as well. You don't see the price numbers. That's a bit annoying, but The thing is that there's always price action here. So, you don't really want me to cover that. That's not smart. I think it's better to cover this side, and then, you just trust me to like, show you the numbers whenever you want to see them, and just make sure that I don't cover this part of the screen up. But anyway, ladies and gents, thank you all so much. We'll try and get Ghost in the next video. He is a super, super cool dog. And I'll see you all in the next one. Cheers. Bye.